Hey everybody, Rich Schaffer, co-founder with Accelerate Equity Group and field partner with United Financial. Doing a little bit of an interesting interview. I'm really excited about this. Got a gentleman that I only knew from afar. I guess you could say, Jamal. I got to know a little bit about you from, it was one person, then it was three, and then it was five different people in our sort of ecosphere that all were following you. And I kept saying, well, who's this Jamal guy? I got to find out what's happening here. And my partner, Rick, had done some collaboration with you and was working with you a little bit on our program, the Money Max account, and how we could be effectively beneficial to a lot of your clients and so forth. So I want to talk a little bit about that today. But first, I kind of wanted to give our audience a little opportunity to get to know, who Jamal is and, how it was that you got into this space. Because usually there's that moment, there's something that triggers you that says, I got to start going down this road. So maybe you could give us a kind of a short version of that story for you.
So thank you for having me, Rich. My name is Jamel, Newerls, insurance agent. I got my start in the finance space back in 2015, working for Bank of America. And I've always had the entrepreneurship spirit, so I wanted to actually provide financial services and consulting to my own book of business. And for the past couple of years, I've seen there was a need of people that wanted to be entrepreneurs, and it was leveraging a lot of debt, right? But I realized that when I go over their numbers and I take a deeper look of their personal finances, a lot of times they can't move and take advantage of opportunities because they're stuck in debt. So I saw that there was an opportunity for me to figure out how to help them even further. That's my goal. Is I try to focus on, as opposed to me saying I can't help you, I try to figure out the solution, and try to bring it to you. So that's my mission and vision. And I was on YouTube and I was following a influencer, and we connected. And then one day he connected me with Rick, and he showed me the platform, and I fell in love with it. The cash flow management of it, the gamification of eliminating debt type of thing, And I just knew that it was a powerful tool to really get people to have financial clarity, which a lot of people don't, So and that's how we're here today.
That's a really interesting story. We talked earlier that in a different way, it's funny how, we're all a lot more alike than we are different. And growing up outside Detroit, I remember thinking everybody I knew was in the auto industry or the construction industry. Those are the two options you had basically for career choices. And I was like, yeah, no, I don't think I want to do that. And so I started getting the Wall Street Journal when I was in middle school. You're too young to know this, but there used to be a show called Family Ties, and there was a little character there called Alex Keaton. And my brother used to always, tease me about that. But I was getting the Wall Street Journal in middle school. I couldn't understand it, obviously. I just knew I had to try to, understand. I had to learn it, And I think it was a little like you, it was a little bit of a personal passion to learn and hopefully be able to teach, someday. And, it's funny when you were telling me a little bit about, I guess your story, you're a recent dad, you were telling me, an 18-month-year-old. So, congratulations on that. And life gets real serious real fast when we have kids. So anybody watching this that has kids, they know that all firsthand. And I've only got one, you've only got one, but especially if those people have 3, 4, or 5 kids, life gets to be a zoo real fast. And one of the things that gets affected is finances. And I think it's because we're not very good at anticipating unexpected expenses, right? Well, that's why they're called unexpected expenses, but they have a big effect. And I wanted you to see if you could talk a minute for, you have a pretty good following. You've done a phenomenal job. I mean, I'm really in awe of what you've done in a pretty short period of time. But, when you've got your finger on the pulse of a pretty broad audience, what would you say are the 2 or 3 things that you find are the greatest struggles and challenges that a lot of the people that are following your content have?
That's a good question, because actually I have a more intimate circle of people that I have a financial clinic with. And yesterday I asked them, I said, what are some things that hurt you the most? Either expenses, income, debt, taxes. A lot of people say that like money management, or debt, sometimes taxes, but one of the main things was actually debt and understanding where all their dollars is going and how it's being impacted.
It's interesting you say that, because when we were talking before the program a little bit earlier, and I think this would resonate with the audience. So I think we'll do a little role play on it. But, we were talking about the fact that every January 1st, there are 2 top New Year's resolutions. What are they?
Fitness for sure, and getting your finances together.
That's right. Fitness and finance. It's going to be get out of debt, save money, and lose weight and get in shape. Question is, why are they the exact same two every year?
Because we don't attain our goals.
That's right. They're pretty important goals, right? They're not frivolous, but we don't succeed. So as the expression goes, you and I have heard it many times, right? People don't plan to fail, they fail to plan, but they also fail to follow through. And as we started developing our program many, many years ago, it was saying there's this thing called life, right? You know, as a financial planner, you can lay out somebody's plan and say, you're here. And if you do this in 30 years, you'll be here. Well, that sounds really great on paper. But what's the problem? When they leave your office and they see a shiny new car on the highway or a commercial for a trip to Disney, that whole financial plan went right out the window. Or when things happen, we were mentioning that, you fix the washer and the dryer breaks, you fix the transmission and the brakes go out. One kid gets glasses and the other one now needs braces. And, it just seems like it never ends. And so it's really this is that, I'm sure you probably played sports or involved in things of that nature growing up. What do you think the likelihood is you could be successful if you didn't know the rules?
Low.
Right? Very low. Not only could we be successful, we certainly couldn't even be competitive. And here's the thing, and you've learned this from your studies too. We're all forced to play what really amounts to be the money game. The problem is we don't really know the rules. And we're intentionally not taught the rules because those that have the money are the ones that control it. And the first rule is the golden rule, but it's not the one you learn in church. It's he who has the gold makes the rules, right? Possessions 9/10. So there's a reason that banks and financial institutions are the biggest building in any city, in any state, in any country in the world, because they have the money, right? Possessions 9/10, and they know what to do with it. And then secondarily, and I got to know this probably resonates with a lot of the people that you speak to, Jamel, as well, but I think it really comes down to the fact that we are a little lost because we're all just kind of reacting in the moment, right? We're all just kind of responding and reacting into the moment. And so I think as a result, we don't really understand the relationship between what we're doing and what it leads to, right? And if we have the ability to have a little bit of a crystal ball, so to speak, and see the impact of what we just did years down the road, it would affect the decisions we make. I'm sure, like me, we all look back and have a few regrets about a few dumb things we did. And if we would know how we would have felt about them years ago at the moment, we probably wouldn't have done them. And the same thing happens financially. So we find that a lot of people are really lost and need that direction. We use the example of GPS a lot, right? I mean, it's second nature now. You're a young guy, you've grown up with technology your whole life. But I remember when we didn't have GPS and we had something called MapQuest, which was really hard to use because you had to print out a route on a computer. Well, what happens when you got lost? You didn't have another computer, another printer around. So you were kind of stuck, right? So GPS is a really great example because now it's second nature. We all use it to navigate every single day. So I tell people, imagine having financial GPS. Imagine having a system that can monitor every dollar you have, every day you have it until you spend it, and knowing exactly which debt to pay off, how much and when. Because in GPS, the biggest part of it is that dashboard, right? Your ETA, your estimated time of arrival, how many minutes and how many miles left. Imagine if that could relate to money. Imagine if every single one of your followers and your listeners said, I could have GPS for money it could track every dollar I earn, the frequency, the debts, the payments, the interest rates, the balances. But even more importantly, it's not just about interest rate. It's about how the interest is calculated, how the finance charges are assessed, and how and when the payments are applied. That's what actually determines true debt service cost or interest volume. And so that's what the system is managing. Because a lot of us think of the avalanche theory or the debt snowball theory, pay the highest interest rate, lowest balance. That's a strategy. That's good. And then there's better, but then there's best. And best is saying, how do we now with mathematical accuracy know exactly to the penny to the day? And that's really where you can have a whole, different opportunity. And so I'll ask you next, out of the people, and you've got hundreds of thousands of people that you've interacted with over the years, what would you say are the top three or even the top two areas where people fail the most?
I think they fail the most at understanding the consequences behind their actions. That's one. And I also think they fail the most at understanding that personal finances is transferable to business finances.
Good point. Yeah, that's a really good point. I think it's interesting because, we're always talking about the theory of it takes money to make money. That helps, right? It doesn't hurt. but it's actually not a fair statement because it takes knowing what to do with the money you have consistently and effectively that makes a big difference, right? And I think sometimes we're told it takes a lot of money to make money because then the average guy thinks they have no shot. Let me just do what I'm told. And I'll give you a little bit of a vernacular here that I think was really appropriate for what you're talking about. We've all been conditioned, Jamel, to become loaners of our money, not owners of our money. We've all been told, take a client that has a mortgage, right? And they have escrows. Well, most of the time you have to have them if you have over a certain LTV, et cetera. But what do they really do with your money? They put it in an account that they make money on, and then they pay your taxes once a year and your insurance twice a year. Well, do they give us any of the interest that they earned on using our money all year? No. If we get a tax refund, people are all doing the party dance because they got like 2, 3, 4, 5 grand and they're going to go on vacation. Well, all that really means is that they overpaid every single week for a whole year and let the government use the money and they gave part of it back. What happened to all the money that could have been earned on that money that was sitting there? We lost it, right? Even in bank accounts, roughly 90% of all bank accounts, Jamel, are non-interest bearing accounts. Now, when savings accounts were paying 0.1% or 20, 25, a quarter of a percent on interest, but now you got accounts paying 3, 4, even 5+%, and people are still not really leveraging it. Why? Well, because let's say the average family makes 5 grand a month and their expenses are 4. And then they spend $200 or $300 a week going to the movies or going out to dinner or whatever. So they might only be left with $200, $300, $400 left at the end of the month. So you know what they think? Well, what difference does it make if I make any interest on that couple $100? But they're not realizing that's not how banks make money, right? They're leveraging the whole 5,000 and any remaining portion of it that's left every single day until they spend it. So again, we're loaning our money instead of owning our money because every dollar has to have a job. We got to put that money to work for us. And I know you teach a lot about that too. We got to use that money to either cancel interest, pay off debt, or save and accumulate wealth. And that's really where our product shines because now it's telling people exactly which debt to pay, how much and when, and how to leverage every dollar every day until you spend it. And I got to imagine that with the audience you have and the core group that you've developed, that's got to be something that would really make a big impact on a lot of those people.
Absolutely, absolutely.
Yeah. And so I think we're going to want to do a lot more collaboration with you. I mean, I love what you're up to. I know there's a lot more of a personal story in the background that I don't even know about yet, because usually that's something that happens in our life that says, I got to be the one to kind of change this direction for my family. And I got to know just from the limited interaction I've had with you that there's got to be some sort of core passion there too, that kind of spurred that on. So if you want to share it with me a little bit, I'd love to hear it.
It's a lot of different reasons. For one, I was working for the bank and I was leveraging at this very moment, and I was always a young investor. Obviously, when you're an investor, there's always a learning curve for everything.
Yeah.
So, and I guess